With Libya is in focus at the moment, Anthony. We're starting work at its biggest oil port to try and boost output. What do we need to see out of Libya to actually see some impact on the broader market?
Yeah, well, what we need to see out of Libya is stable production and stable exports coming back. That's the simple answer. Libya was one of those outages that had been pushing the oil price up earlier this year. You remember we came up from the lows that we saw in January. Prices have come back a little bit now. Some of those other outages, like Canadian wildfires, people knew that oil was going to come back. Libya is a much bigger question mark because of all the political instability there. So what we'll really need to be seeing is a stable enough political agreement that allows the national oil company to repair some of the facilities there that were damaged in all the fighting that's been taking place over the last couple of years there, repair those facilities and actually bring the production back and continue those exports. So we need to see some sustainable and some significant production coming back from Libya. The maintenance work that you mentioned, that's going to take about 6 months, some officials tell us there, and it'll bring back, at the beginning, less than a third of the full export capacity of that port, the Essaouira port that we're talking about there. So we're really talking about gradual steps there before we get back to bringing Libya online. And the point is also, we really don't know how quickly they can come back, how much was damaged there. If there is a more encompassing political agreement there, can things come back on more quickly? So that remains a question mark. And that supply that's off the market, along with oil that's in storage, remains an overhang for prices and for the market.
Anthony, now, of course, another overhang is Iran wanting to also up their output as well. What's going on with their efforts to raise production then?
As Bernhard said earlier, it's going to take years for them to bring that new production on. But really, that's where they're focusing, because they've come back most of the way to getting where they were before sanctions. That's been by bringing on oil fields that were slowed down or shuttered during the period of sanctions against Iran's nuclear program. So a lot of that has come back. They're exporting about 2 million barrels of oil a day. That looks to be sustainable, according to analysts that we've spoken with. And now that big next step is, once they've brought that 200,000-300,000 barrels a day that they've still got coming from those shuttered fields. The next big step is another 800,000 to 1 million barrels from either new fields or fields that have been underdeveloped and need more work. And they're going to need a lot of new technology and new investment. That's why they need to get these foreign companies in there.